Hello, hello, hello. Welcome again to another session hosted by yours truly, Mac. I'll be right back with you guys. So brief pause. Meantime, just look at GBP, JPY. I'm gonna set up my parameters here. I'm waiting for this 15-minute candle to close above this minor resistance, guys. So be on the lookout. That's why I kind of started the stream a little earlier. So I want you guys to kind of like see what I'm looking at right now. I'm looking at this. Which is breaking right now, this resistance, which is coming from here actually. And if this 15-minute candle closes above 154,600, which is here, perfect. Awesome entry for a buy, guys. Just definitely just wait until this 15-minute closes. Remember, it's some fuckery. As soon as Asian opens, which is at 8 a.m. We already have one 15-minute candle. We need the second one, guys. We need the second one. First half of the hour. Waiting for a close. Hopefully we get it right. Waiting. Watching. Fuck. Okay. And for sales, we will have to break it below this zone as we're going up already. We're looking into the higher time frames. We're still on a very bullish trend. So for sales, I will need a strong break below this zone here, and that's just basically to make a higher low at that point. So this is the no trade zone. Alright. Cool. And sales underneath this area. $154, 400 flat. Okay, cool. Awesome. Trade zone, perfect. Now let me go ahead and send the zoom. This is my terminal. A lot of guys don't want to see. Now, this is the new thing, just to show your terminal. I'm fucking with you. I'm fucking with you. I'm fucking with you and you. Well, yeah, guys, it's looking very nice right now, This is pumping. I love it. Pumping and pumping. Pumping and pumping. Wow, I'm about to hit the first TP there. First TP got hit, guys. It's perfect, so I'll be closing a couple of my positions now. Okay, what the fuck? Alright, anyway, fuck it, you know. Yeah, guys, I think this is gonna continue running. Final TP is up here, so just for the fuck of it, hold your positions if you want. If not, you know, just start securing some of it. What I'm seeing right now that this should be continuing up. My first target got hit already, 10 pips. I'm gonna close, you know, half of one position and leaving the rest run. That's this MetaTrader. But yeah, now we're out the clear. If that 15-minute closes above that area, it's very sure a continuation of, guys. So at least 154 or 830. It might be a little slow, but you know, it's already a good trade. Really good trade. Trade gang. Remember, guys, if you hit this trade right now, please give the stream a like already. Wanna kind of like show someone, a couple people here, how to close partials without magic keys on MT5, right? Okay, so let's go. What the fuck? Alright, whatever. You guys see the screen. It doesn't matter. So, what you guys kind of see, right? So right now, let's see. I want to close this. I'm like fucking muted, man. Oh my god, this is annoying. Alright, let's see. I want to close half of this one lot that I have running, which is already at 10 pips. Which is already what, at 10 pips, right? Yeah, okay, so double click here, boom. What you're gonna do is type in 0.50, not 0.050, and it will be closing 50% of your position. See, it's popping still, but I'm gonna close it. Seeing that this candle's closing with no top wick, you know what? I'm gonna close all positions. I don't trust that shit. Anyway, it should continue up, guys. But if you took that trade based on impulse, give yourself a pat in the fucking back because you know you won today. So, quick 150, 60 bucks, whatever. Done for the day. You know, 15 pips. I'm good. So let's go back to our normal shit here. Sorry. Oh man. Oh shit. I'm drinking Red Bull on my shit. My stomach is killing me right now. Fuck, why did I do that? I have bad acid reflux. If you wanna talk on Zoom, just let me know because I'll be muting everyone. On entry, you know. Alright, guys. Zoom. Share. But yeah, you saw how that close with no top wick. That was my no-no to say. That was basically my no-no right there with no top wick to say no, bye-bye. Arrivederci, because I'm not sticking in that sticky situation. So yes, that's basically it. You know, I already got my trade for the Asian session. So dope. Let's see. Okay, back to our normal analysis here. Close that trade. Not holding it. So that 15-minute closing on top wick. That's scary to me. The moment I see that, I just close. You know, I'm not gonna risk anything. Even though we're already past this zone here, 154, 570, should be on a very clear range for price to continue up. But we might have a nice deep pullback now, guys. You know, if you're still in that trade, perfect. Just manage the trade accordingly. It's a $900 account only, so you know, chilling. It started at 500 this week. It's at 900 right now, so that's good. And what am I gonna do now? Close my charts. I mean my MetaTrader. But I'm just gonna open this based on what we do always, which is go into the higher time frames and do the same thing again. Identify the trend, see if there's any major changes, which I believe there's not. We still have very bullish momentum on GJ, so it means what? That we're going to continue looking for buys rather than sells. More buys. Okay, so buys rather than sells. You get buys rather than sells. Always do a little count here, see how many bullish candles we have compared to a bearish. And what do we see? Since it looks like we're creating basically, you know, a simple market structure on a bullish trend, higher highs and higher lows. You have your higher high here and your higher low at this point. Support created down this area, and this is the weekly, and the next resistance, which is 156.300. I have it now, right? So I'm gonna actually drop a little line here, just to know that that's the top of the body of the candles, right? This is the top of the wick, so just to know. Perfect. So now we go into the 4-hour. We identified the channel we're in to trade. So what are we seeing now? We're already past this area now. So let's go ahead and disregard this. This is already from the past. This also is from the past. Now we're creating this right here, right? So take this off. Zoom in a little more. Oh shit, we got my boy Mitch. Mitch, where's the little baby? Where's baby Mitch? Mitch in the house. So yeah, like I was saying, even the 15 or the 30-minute closing with no top wick, for me it's a big, you know, like get the fuck out of the trade type shit. So the moment I saw that, I closed. Yeah. But the parameters that I had said were still valid. Now we're just gonna look into the 4-hour and see the channel we're in, right? So we see a double bottom here. Resistance at 154.800. I have set up an alert here as well, and basically we want to stay above this area on the lower time frames, 154.560, to continue up. But you can clearly see how we're making higher highs and higher lows even on the 4-hour. We have your low here, your high, your higher low, your high, and your higher low. So what do we need next? The next higher high. Just to draw it a little better. You have your high here, low, high, realize that I suck at drawing with this. Alright, anyway, just your high here, right? And your low. At this point, when we broke all resistance over here, this became a higher high automatically, and this becomes a higher low. And previously, you can see the same, right? Higher high and higher lows. Got something like this support here, spike up, retest, continuation up, break, and another small retest. Wow, look at a fucking crooked ass. Another retest. For now, what? Continue up and penetrate. I mean, pierce through here. Continue up. This is the next spot that I have drawn. I don't know where. Oh, this, as I mentioned, the body of those two big gladiator candles on the top of them, the closing price. Alright, that makes sense, guys. Mac, do you don't do swing trading? No, man, I'm not a swinger. I don't like swinging. Okay, okay. Alright. So what do we need now? We need just to stay above that zone here, which is, why am I talking like a redneck? Which is 154.570. Right above that area, we should be good to continue taking buys. Remember, we're just making the same shit here, but on a lower scale, higher time frame, lower time frames, and simple market structure, higher highs and higher lows. Whoa. God damn, my arm looks big, bro. Boy, look at that. Sheesh. 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 Oh. Yo, Mike, you have that red line above? Why you have that red line above? Which red line? I have a lot of red lines. Gotta be more specific. Above red lines. Could you break down XAU USD? Yes, I'll break down gold and a little. I'm just trying to see how this closes, right? So I'm waiting until 20 more minutes. See how it closes. If we stay above that area, perfect. I'll go ahead and say that if we go above this high here, then it'll be perfect to continue taking buys and get this little squeeze to the upside, which is 14-15 pips. Good enough. Damn, this fool's prepared today. Red Bull proper charting. Yeah. And this guy's a dick. But yeah, let's go into gold, guys. Gold. See how gold is acting. Probably like a bitch, but that's how gold is. I was trying to get a trade from here, but sheesh, I saw that massive consolidation on the 30, and I said, fuck that. I'm not staying in there. Mac, do you trade or watch GA? GA is Georgia. GA. Georgia. Atlanta, Georgia. Migos. Morning, chaps. I float around here and there, and sometimes the gossip and the minuses. I actually trade on EA, and I use Renko, but hope you all have a solid week. Get the fuck out of here trying to fucking promote your shit. Fuck. Dumbass. Come on, moderator. How are you gonna let this guy fucking promote shit here, man? I use Renko. Renko can suck my dick. What are the times for the live streams? Yes, times are from 8:30 p.m. now to 11. So guys, that looks very promising as we are grabbing liquidity here, and the trade code laid out perfectly fine. If you're still holding and you haven't hit your first take profit, I suggest you to keep holding as we're getting close to 9 p.m. and this should continue up, slowly but surely. on, guys. We only got 78 viewers. This is crap. You guys gotta do some work, man. You gotta tell your mama, your auntie, everyone to hop in, man. Hop in, man. Okay. Alright, so basically the trade idea was this, right? You have okay, so let's go back here. Alright, so let me go ahead and try to see from here, right? So I'm gonna play it. This is basically what happened. Bang, to the downside, massive liquidity grab. Boom. Just fucking load this P here. Shit. Alright, so basically what did we see here? Price moving from the 15, right? It looked like we tapped around that area. This is still 715, right? Still 715. Going up, going up. Boom. Massive at 7:45. Close to 8 p.m. already. You know, there's going to be a pullback or a rejection. That was it. That was a rejection. After that, as soon as we stayed above this zone here on the 15, that was what counted. You know, this area here. Because why? This is coming from previous support. From here, that rejected. Here, rejected. Support held until this break here. So basically this was the no trade zone here. I wouldn't say no trade zone because I actually got the entry here on the 15, seeing that rejection, but you know it's kind of tricky to trade based off just pure rejections. But I was counting on the 8 p.m. push, so I'll check the zoom. Give me 1 second. So what's up? You're missing gold? Oh shit, my bad. Oh my god, my bad. So, oh my god. Yeah, I was too concentrated on this, so give me 1 second, Ted. Cancel. Alright, you can unmute yourself. What's going on with gold? Let's go ahead and check it out. Check out gold. What's going on with gold? I'm missing gold. Oh shit, look, gold is breaking above that area, guys. So that was the I had an alert set up here.
Yeah, you had an
alert. Now you were my alert.
Yeah, it was your alert.
Yes.
So I think what you'll find is at 9 p.m. With this flop. So if you look at the hour candle, we have that rejection from the downside, which we always look for.
Mm-hmm.
That's probably going to be the new zone at 9 p.m. So expect potentially a push down a bit back into that zone rather quickly, and then a drive up. And I think we can hit probably at this point looking. 9:30, probably tap out at 1875. So what I'm going to be doing is I'll be looking for a trade probably in the next, obviously 15 minutes or so. I want a rejection back into the zone right around, say 1869 or so, if we can get there. And then as soon as it creates a bottom wick on the hourly, if that support holds, I'll have a stop below the current hour wick, because you can see that's a bit of a support across the board on the hourly, and then go from there.
Perfect. All right, so basically just a small rejection again back to this area, little higher than this wick. So maybe something like this. Maybe I could draw it. So kind of like have a visual wick here, and the candle, of course. So give me 1 second. It's the blue. So something like this, and then a small wick right here, right?
Yeah.
Right. So yeah.
If you were trying to catch this, it would have been very difficult. You would have had to probably drop in on the 5 minute, and you would have seen a bullish candle finish with a rejection, but finish bullish, and then you'd have to grab it on the way up. I wouldn't have advised taking that trade unless you had support at like 17 or 1868. Exactly. If you had a support at 1868 on the 5 minute, you would have caught this trade up to 1871.
Exactly. I was actually looking at that on the MetaTrader. I was looking at the 5 minute before I closed it. So yeah, basically that's how it looks like. It looks 1869, which is here. If we get another tap down below here, would be perfect. You know, it will mean that we're already grabbing liquidity. The liquidity pool has been created, and price should continue up by 9:30. 9:30 is that time where the Shanghai Stock Exchange opens. So you know, liquidity comes in, a lot of buyers come into the market, and I'm guessing we're gonna have that pop. Remember, we have still, you know, little rejection zones around here. So let me just note it down here. So we got wicks above here. So this is 1873, right? Minor resistance, not that big of a deal, but just in case, I'm gonna just leave it like that. Let me take the rejection zone off, and basically we want to wait for a clean break above this zone here, which I have marked up 1871. Well, 1872 if you want to be right on the dot. Waiting for $18.72 flat. And as Ted mentioned, guys, just you know, if you want to wait for and catch the rebound per se, wait until we get maybe as 1870, 1869 retest, right? So if you're looking at the 1 hour, you can clearly see it right here, right?
Yeah, so if you look at the 1 hour candle right now, it's doing some bouncing. So this is actually good for us because what it's doing, it's pulling back for the last 10 minutes of the hour, hopefully. Once again, the indication will be providing when 9 p.m. opens. So this is exactly what I look for. When 9 p.m. opens, we're probably going to have a lot of movement. It's going to drive potentially to the upside right away. So if you are in a trade right now, you may get a few extra pips. But then what you may find is like maybe 1 or 2 5-minute candles in, it starts to drive to the downside to create a wick on the 15-minute candle. Now, what we're looking to make sure of for us to have a valid trade on the first, say, 15 minutes or the first half hour of 9 o'clock is that the wick that's created starts to drive up. So what I want to see is I don't want to see a wick drop below, say, 1866. Right. So if it taps 1866 and that's where you would start watching your 5-minute candles to see if 1866 is support, it holds support. And as it starts to hold support, you'll notice then obviously the 15-minute candle, the 30-minute candle, the hourly candle is starting to create that right rejection from the downside. That's where you could potentially start taking trades. It's obviously super risky because you're on the 5-minute time frame, but what you do is you then put your stops a little bit below that, because ideally if we go down to 1866 and your target is 1875, 1873, you can afford to have a 20 or 30 pip stop loss because you're going to get like a 40 to 60 pip gain on the upside. And what I'm saying with a 20 or 30 pip stop loss, that's sort of like worst case scenario, because once again, you're not taking a trade when there's bearish candles forming. You're taking a trade when bullish candles are forming. You're just working off the smaller time frame. And the idea is this is the last tap down to that level before we start to move up. So you're catching like a 5-minute candle where it started to go bullish. So instead of waiting for like a full 15-minute candle to finish and potentially missing 20 or 30 pips, you're then saying to yourself, okay, I'm going to anticipate this now being the bottom portion of the wick for the hourly, and I'm going to take a trade off of this 5-minute candle. When it's bullish, it finishes bullish on the anticipation that the rest of the 5-minute candles will start going bullish back up, which then creates your bottom side rejection to go further up. So that's a little advanced. If you are looking for, like when people say, how do you get entries, or what entry, like when do you want to take entries, that's sort of what I would look for at that point. It's very high risk because obviously when you're working with the smaller time frames are a lot more volatile. But I mean, you do potentially get a better entry, but you're also putting a lot more risk on the table. So maybe you have to wait, like Mack said, till about 9:30, where we see where prices move to, and then wait for the new candle to form, understanding the full direction at that point. But you could start to see right now the hourly candles pull back. It's finishing bullish, so we should have a continuation of this bullish move to the upside at that point. Even looking at the higher time frames, we're starting to move bullish. We may finish off this up to 1874, which fills the previous daily wick. Because remember, the daily candle finished bullish, so there's really no change in direction yet. So you may have a safe trade up till 1874 at that point.
Right. And you can clearly see even on the 4 hour how it's following simple market structure, how we just created a high here, a higher low here, and of course if we continue to break above this body resistance, the resistance of these two candles, this double top, whatever you want to call it, we're gonna continue above, but we need that clean break above 1871 just to be safer. But the 5 minute, I know it's a little complicated. It sounds complicated, and it might be complicated. So try to be mindful about that, because if you go into the 5 minute time frames, you're gonna see price moving a lot faster than what you think. But that's just the way it is, because at the end of the day, you're just trading on the smaller time frames, and these candles, you want to measure them. They're giving you at least 10 pips each, right? So 6. This one's giving you about 8, and just in 5 minutes, right? So like Ted say, high risk, high reward. So this is when when your risk management comes through clutch, right? And the timing has to be exact. You want to wait until 9:30, which is basically the Shanghai Stock Exchange Open, the stock exchange for China mainly, and then this can bring in more volatility. But what do we see before, like for example, the NYSE or any other stock exchange open on gold, especially on gold? We see a pullback. We see a major pullback, and we can clearly see liquidity pool being created on the higher time frames as well, like the 1 hour, maybe the 30 minute. And the higher the time frame, the better the confirmation always. So seeing how this rejected the downside, and we're still rejecting this support here, I believe that when we see 1 5 minute, maybe 2 5 minute, 1 15 minute candle closing above this zone, it will be a lot safer to continue and ride the trade up to at least this daily wick fill, which is 1874, and this is around 27-30 pips. And if you want to continue it up, then 1875 giving you that 50 pip trade towards compared to your 20 pip on stop loss. Having a $2 stop loss is good on gold, as long as you know all the exact time that you're entering. And of course you want to go ahead and if it's going against you, start closing your partials. Don't let the trade basically take your whole profits, or basically take you out in just one candle. Hold the drawdown. That's the one thing that I learned about gold. You have to hold drawdown. You have to learn how to hold the drawdown. It's really hard to get a trade with no drawdown on gold. So yeah, it's just the timing um, thing right now. It's just about timing. We've got to wait until 9:30 basically and see how this 15-minute and the next 30-minute react. If we stay within this zone, I think it's good, even though it's a non-trade zone, as I have it labeled. But this can be a liquidity pool for price to continue up. So what do we see on a liquidity pool? We see wicks, right? We start seeing more wicks and rejection. Where? To the downside if we're going wide on a bullish run. On a bearish run, what do we see? Wicks to the upside, and then we see what? Candles closing to the downside, closing bearish, and continuation to the downside. That's if the trend is bearish. But right now, same thing, guys, as GJ, any other pair, we first check out the higher time frames, weekly, monthly, daily, as well as the 4-hour to identify a channel. And from there, we can go ahead and say that what's best to do, if it's a sell or a buy. And at this point, you don't even have to count the candles. You know, it looks kind of messy. I have a shitload of lines, to be honest. But you can clearly see that if I remove the drawings, 1 second, we can clearly see that we're in a very bullish trend right now, right? And just to go ahead and analyze here, what do we see here? Just a rejection zone, right? So be safe. Go ahead.
Yeah, Mac, if you want to go back to gold,
Yeah.
So there's something of interest right now. So if you go into the 15-minute time frame, this is a perfect example where the 15-minute time frame rejected like 1871, and we're starting to drive down a bit. This is creating indecision on the hourly candle, and that now poses a problem, right? So if people are looking at this trade and they're saying, okay, well, I want to try and take buys, you have to be careful, because if the hourly candle closes bearish, that's not a strong enough confirmation for me to try and take buys to the upside, because what you may find is the next hour candle now, instead of us driving further up, is going to continue to drive down, potentially back into, say, 1868, 1866 area, and then potentially go further back up after the fact. So these are little things that you have to be cognizant of when you're trading, and actually watch how the different time frames are reacting, because a lot of times we're going to always say, okay, the higher time frame is going to dictate overall trend, but the trend in the overall time frame is always somewhat adjusting, so to speak, right? Like if the 4 hours suddenly shifted bearish, the buy confirmations would be no longer valid. So what you would say to yourself is, you'd say, okay, I'm looking for sell confirmations, and I would look for where's my zone to the downside, right? But you have to be careful with that, because of the fact that that the daily candle, so to speak, has just started, essentially, because we're in the Asian session. So there's a lot of dynamic movement now. So a lot of times when you're trading the Asian session, it's very choppy, very difficult to move through. So it's just something to keep in mind, that like when you start watching your smaller time frames and you start to see things happen, there may be, you adjust on the fly, so to speak. Like you put an idea in your head so that you're able to see what's going on, but you want to essentially adjust. So we'll see in about 8 seconds, 7 seconds, how, if you jump into your 15-minute candle, so to speak, or even your 5-minute candle, you can start to see where we're starting to move. So your 15-minute candle now dumps down, which was what to be expected. And this is where we sort of have to watch and say to ourselves, okay, how do you want to manage this trade? Like, is it possible that we're going to continue to move up? And that's where you'd flip to your hourly, and you would say, okay, I want to wait for us to break above, say,
1871.
Like 1870, 1871, and then I would want to take trades, because that this hourly candle finished bearish, so this new hourly candle could drop all the way down to like 1868 first, before creating a wick, because this hourly candle didn't finish very strong bearish, but it's still a bearish finish, so to speak, on the hourly. So that's why we're getting this drop down. So this drop could continue almost a little bit further down to like 1867. It could move further down, but now what you can do is you can put a buy stop at 1869, 1870, and now once this candle starts to drive further back up, if we believe there's move to the upside, you then have a trade with pretty much no drawdown, because at that point liquidity has been grabbed, and you could probably get to 1871 and then eventually 1873.
Right. That's a lot safer than waiting until here and maybe get a rejection below this support we have here under 1868. Like you said, we actually tapped in. with
Yeah.
this new hour. And basically, we don't want to go ahead and jump into a trade right now because it's very uncertain. Even though market is dictating that we're on a very bullish trend, I don't want to go ahead and risk it because on the next, let's see how many minutes we got. 29 minutes left until the next high volatile basically opening, right? So yeah, I just literally want to wait on and see how this plays out during the no trade zone. How I have it marked here. I just marked it as no trade zone because we can still get a trade in, but for now, I just want to go ahead and wait until 9:30 to see how we are settling. Um, I would just want to see a settle. Basically, I want to see a support being formed, maybe more rejection to the downside for price to continue up, and you have also that second basically your plan B, which is a drop, right? Which it can happen. I know it's knowing gold, right? We can go ahead and break easily below 1868 and continue down. It doesn't look like, but I'm just stating like as a second play, basically, right? So you want to have your second play and your first play. First play will be a wait until 9:30 and seeing a close and break and close above 1871, which is actually what we're looking at right now, and we expect to happen. Or let me go ahead and type this. If we get a break below 1868 for sales, waiting, sales wait for a break and close below 1868 point. Yeah, 1868 flat actually. 68 flat. Risk here. Then buys. Trend. It's still.
Yeah. So I just closed the trade that I told everybody to take at 1870.
Awesome! Wow, look
10
at
pips.
that. Beautiful. So look at that. Wow, right at 1868, just how he called it, guys. 1868, it tapped right at 1868, like he mentioned, and now it's continuing up. So this 5 minute, which is closing in 2 minutes, should continue up and continue to tap the next high on the daily, which is 1873. I'm sorry. And wow, beautiful. If you took that trade, go ahead and thank Ted for that. I wasn't even looking, I was typing here.
Yeah, no, I mean, but once again, I mean, if everyone could sort of see what happened. So
Yeah.
The 5 minute candle basically rejected that 1868 area. We had a buy stop at 1870. It got activated and then basically continued up. And then what you're basically looking at, I was just looking for a wick fill on the 30 minute. The way the 30 minute candle finished, I figured that we could probably tap the top of that 30 minute wick from the previous hour.
Right.
That's all I wanted. I mean, it's the Asian session. I mean, I'm not too concerned taking big trades during Asia. Like I said, it could go to 1873. It can go to 1872. Like I said, I'm looking for a clear win. That's basically like 10 pips with no drawdown. And that's essentially what I wanted. So when you think about risk to reward, it's basically 100% reward, no risk, because we planned it out. And now when it hits that level at 1871.80 around there, you might find it might get a little fidgety because we're entering a zone at 1871.77. There's a lot of rejection at that area, so it's all another thing. You get, you have to understand that too. It's like, yeah, obviously we'd love to go to 1873, 1875, and there's no doubt it probably will reach there. But the initial push for the first 10, 15 minutes of an hour, it's not going to drive 50 pips. No. So, you also have to take that into consideration too. It's like, hey, I just did a risk to reward with, 10 pips, really no risk at all. Why am I trying to stress myself at that point? Like I could just, I just take the trade, I close and I'm done. Like I planned out my trade. We walked through before it actually happened, planned the execution, took the execution, and then just, that's it. Like, I mean, people have to get used to doing that because this is your key, because these kind of wins can happen all the time for yourself. But the problem is, it's when you want to squeak out a little bit more. It's like, oh, I can get up to 1873. And it's like, yeah, but what if it rips right back down at 9:30, back down to your entry, and then goes back up, right? So there's a lot of different ideas, but it's like, for me, I'm always looking to say, hey, If I can grab 10 to 12 pips profit during the Asian session with no drawdown, that's as good as having a like a 1 to 5, a 1 to 10 risk to reward, or like
in any other
what?
session, right?
Yeah,
Yeah, that's one thing that I learned from you, and I always tell everyone that just take a small piece of the pie. You don't need the entire pie. You're gonna get filled. You're gonna get the itis. You know what the itis is? You know how you feel after eating a lot of
yeah,
carbs. Stop doing that. Get a small piece of the pie, especially when it's gold. Gold moves 10 pips like nothing.
yeah.
What do you have to know about gold? You just gotta know the timing, right? 9 p.m., 8:30 p.m. You know these moves happen all the time, all the time. You just gotta look out for them. Now it's the Asian session. You definitely don't want to be holding that trade for longer than those 10, 15, 20 pips. But oh, that's when human greedy, being a human, you have
Hmm.
greediness. It comes through, and then you think, well, shoot, might as well. Since it's the daily candle opening, I know for a fact it's gonna go ahead and hit the top of the previous one and get a wick fill. But no, I've seen this happening so many times, and I'm so
Yep,
tired of getting burned by gold because
yep.
I saw the pie, I tasted it, but I didn't take my piece. I wanted to take the whole thing, and what was I left with? I was left with crumbs, or maybe I had to pay for the pie. But yeah, gold is just like that. Just get used to it. I was talking to someone, a young kid yesterday. He started trading gold, but he was just holding these massive lots, right? Like 3, 4 lots, which is a lot for him. But I was just telling him, if you're doing 10, I mean 4 or 5 lots, and doing 10 pips, that's it. Just close it. It's like, why do you want to hold and then just being drawn down? Especially during the New York session, when it's easier to get a trade rather than wait until 9:30 p.m. for the Asian session, and get all fidgety and get in
Yeah.
that. Yeah, go.
Yeah, the other thing too is what people have to realize as well is the fact that this gives you confidence. Like when you take
Hmm.
a trade and you actually win a trade, that's confidence.
Another thing about that, the confidence part, is that he sees most people, they get the first trade easy, boom, get the win, they get the
Yeah,
rush, right? The sugar rush, whatever you want to call it, and then they go ahead and they jump into a different trade, on the same pair, whatever. 5 minutes pass by, you already made what, $300, $400, doesn't matter how much you made, but you got a winning trade. So all you gotta do is just close your MetaTrader, and that's it. Call it a day, right? Until you get the expertise, and you want to continue to trade based on your schedule. But if you don't stick to your schedule and you say, fuck it, let's go ahead and trade more and more and more because I got one win, I'm definitely gonna get a second and a third. No, 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 no. Overconfidence, yes. Overconfidence and instant gratification. That's what's basically what's wrong with people my age. You see one trade that, especially with gold, right? It's a lot of greed. Yeah, I agree.
yeah,
You get that trade, 10, 15 pips, you close, boom, you made your money for the day. You made a lot more money than most people. Don't compare yourself to others, but just have that in one little corner of your head. Go ahead and
yeah.
close the freaking terminal. That's it. You're done for the day. You
Yeah,
know?
like, I think too, Mac, the other thing is people are programmed to think that the longer that they stay in front of the charts, the better the results are going to be. And
Exactly.
that's the farthest thing from the truth. Is it's not about how much time you spend in front of the charts. It's how you do your analysis and how you execute, right? You can see, like, we literally spent maybe what, 7 minutes
Hmm.
discussing that. Obviously I
Right.
know a little bit more about gold because I trade it regularly, but I mean the idea was pretty simple. It's like, hey, if we hold above 1868, we should then drive up. We're looking at 1871 and probably like 1873 as targets. How do we get those targets? We look to the left, we see where there's rejections, so that's usually our first target. Because when you think about how the market works, you have to think very, very clearly. Is orders move, right? So
Right.
price is moving, and I think this is a big disconnect with a lot of people, is they don't understand that price is moving. Like orders are being filled and orders are moving. So then the question becomes, okay, where are those orders, where do those orders have to go to, and where does it make sense that they go to, right? Like a 15-minute candle is probably going to return to a 15-minute spot where there's a rejection, whether it's a wick directly to the left or a little bit over to the left. Like you can see, Mac, if you go into the 15-minute time frames and you zoom and you have them set up here, you can see quite easily where, where simple things are. Okay, so we see right here, if you zoom in a little bit more, you can see like this is probably our first rejection, right? Like we see the one that's closest to us. As we go over, we can see this one is another rejection. So we can say, okay, this is probably going to be my first target, right? And then I can say, okay, once this creates a support and holds, this next candle will probably go up, and then, eventually fill to those next target levels. Exactly. And a lot of people don't look at those things, and they don't say to themselves, okay, where is my target? Because in this instance here, right, when we took the trade, it was down over here and it filled up over here. This was your initial area of confluence to say, okay, if we go up, where do orders have to go? Right. And I think a lot of people make that mistake is they don't look to the left and say, where do these orders have to go initially? And then start scaling into the long term and saying, okay, because orders went here, now they're going to have to go a little bit further over or wherever they're going to go. You can see right now it's pulling back a little bit and there's a bit of a rejection. So now you have to sit and wait, and you have to say to yourself, okay, fine. With this being said, that sort of goes in line with the fact that, we talked about earlier, the hourly candle previously was a weak bearish close, but it wasn't bullish, so you had to err on the side of caution that if we do drive up based on the previous candles, there is a potential that we could continue further down a little bit and then pull back up. So you might find that once again, if you miss the first buy stop at like 1870 or so, you may want you could potentially install it again, and you might not get it in this hour or in this next 15 minutes or so, but you might get it in the next half hour. You might get it at 10 p.m. and it might just drive up a little bit. But the key here is you're not trying to take a trade while the current hourly candle's bearish. And I think a lot of people make that mistake from the get-go, is they're going to try and take a trade right now and say, okay, well, I know that 1868 is a support area, so if it bounces off that support again, I'm going to take a trade. And it's like, well, not necessarily, because you've had a massive rejection from the upside, right? So once again, if we're looking here, you have a massive rejection from the upside right over here, right? So this is now a rejection area. So you have to say to yourself, where do we think price could return to? So price can return to potentially over here. Price could even return down to here. So what you get is you get this effect where it goes, let me just delete that for a second. You get this effect here where, okay, sorry, I'm pushing the wrong buttons.
No, you get.
You get sort of this effect where we reject up here, we then go down a little bit, come back over here, reject here, and then start to drive up again, right? So essentially what ends up happening is this. You have this whole move up, we got to the top, come back down, and now we go back up again if we're playing within a bigger range at that point, right? So there's multiple ideas and there's multiple instances of where things can happen. I think it's just a matter of saying to yourself, okay, if I'm looking right now for buys, I'm not going to be taking buys on this candle.
No.
And that's fine. And there's nothing wrong with that. You'll sit and you'll wait. And then maybe next hour, the 10 o'clock hour comes, pushes down a bit. Actually, it goes with no wick as an example. So the next hour, drops down with no wick, right? Mm-hmm. And then suddenly a wick is formed to the downside, and then that starts to drive back up because you've hit a bigger support. And then you can basically say, okay, fine, I'm going to take a buy above this area here to this area again, because we know that this is a pretty valid range, because we've seen price go up, price go down, price go back up. So once it comes back to this level again, chances are it's going to go back up. And where is it going to fill? It's going to fill this order area. And when people talk about the difference between supply and demand and support and resistance, here's support and resistance, right? This is a support area. Here is a supply area. Here is another supply area. We have a single tap and a rejection to the downside. Single tap, rejection to the downside. So knowing that orders have been collected in these areas, pushed down, orders are collected, pushed down. So now we have to look for a demand zone, which is near our support area, where we have a single tap rejection, but then we start to drive up. And then you can say, okay, perfect. I found an area where liquidity was pulled from, and I can then take a trade further up at that point. Those are some key ideas that people need to just sort of watch and be aware of, and that'll help them, right? Because we see this next 15-minute candle. Obviously, it's going to start moving down. Why? Because we had a whole bunch of orders come from this area. So where do they have to go? They have to go somewhere. Yeah, and that's where a lot of people make that mistake, is they start to buck the trend and they say, well, this is support, it has to hold.
Right.
No, it doesn't have to hold, but you have to wait for a clear rejection from that support to then drive further down, because this candle can drive down and then pull back up, and then suddenly you're going back up, and this area here then becomes the supply area at that point, or sorry, the demand area.
Exactly. And that's another thing right now, because all the thing that you just explained right now, this is actually pre planning for even London Open.
Yeah.
Going down here, grab liquidity, make a liquidity pool, like you said before, areas of supply, one tap, close, one tap and close right below, creating those orders, right? Those orders are getting filled. And where do they have to go? They have to go somewhere, and that somewhere can be, based on the trend, how we are seeing. We're gonna go based on that mere, straight technicals. And what do we see on the daily as well as the weekly? We see a bullish momentum, bullish trend. Of course, we're gonna have pullbacks like we've had before. For example, here, I believe you said something about on the chat about 1770. I think it was around here. This is on the 11th of May.
Area 1870.
Yeah, 1870. I mean 1770. I just wanted to recap about this zone here, right? This zone here was very, very tricky, right? Because you had this massive rejections, support being held, and then we had a nice break above, and it looked like we were gonna continue up. But what happened? We had another pullback. So like you said, supply one hit rejection, and then continuation down, liquidity being grabbed, and then gold playing with us like usual, ranging, and then another one here. This actually happened at 8 a.m., which is the North American session open, and then a continuation up. So that has been replicated here, as you see, and what I think is that we're gonna have the same thing here.
Yep.
Right?
Yeah, I mean, and like you can see here, like once again, the daily candle, and this is where people sort of get confused again. If Mac, if you go to the daily, this can be dissected a little bit more, and we can get a little bit more information. So if you can zoom in a little bit on the daily, get it a little bit bigger so that we can get a clearer picture of this daily candle. See if you can get it in. Yeah. So okay. So here's an example of where people are going to get messed up, right? At this point, as an example, this daily candle finished bullish. We can agree that this is a bullish trend, uptrend. Now, this candle's going bearish, right? So everyone will turn around and say, well, Ted, look, it can drop. And, I believe it's going to drop down to over here. And I would say, okay, well, what's the rationale behind that? Has anything really changed in economic development in the last day or so to push gold moving down? And you would say, well, I don't really know, because I don't really follow that stuff. I don't understand. So that's really the first part of the issue, is people are making assumptions because there's a rejection over here on the daily that all of a sudden we're going to start to drop, and now we're going to go over here. Fine, that's you're more than welcome to have that opinion. I don't really agree with it. The rationale behind why I don't agree with it is because we've seen numerous times where we have massive wicks to the downside and then we continue up. So what we can say here is there wasn't really a massive wick to the downside. So how are we creating that massive wick to the downside? Well, that massive wick to the downside is coming back into this zone over here. So if we were to make this a mini zone as an example on the daily, chances are we're going to probably tap back into there and then start to drive up. So now it becomes very easy to trade gold, because what you'd say is, okay, I'm going to take any buys above this area, because essentially at that point, this wick coming into this previous wick over here ends up making this rejection over here, and then suddenly you have this candle that looks like this, like a T, and then eventually it starts to move up like this. And then, eventually it starts to move like that. And then what ends up happening is you get a wick fill on the daily. There's numerous instances where that happened. example over here as an example, right over here. Perfect example. You have this tiny wick, but look at this huge wick over here that dropped further down before it filled that area, right? But that's great because then what you say to yourself at that point is you say, hey, this huge rejection is awesome for me because I was trying to take a buy over here, but now I can take a buy right over here as an example, knowing that we're filling up to this area. But then this is probably just the Asian session. So now we've got a whole London and New York session to continue further up. And you're like, this is great. I get a better trade than what I was trying to get yesterday. And the same thing ends up happening here, where it's like, okay, if this candle now rejects and creates a wick to the downside over here, now I can say, okay, perfect. I'm going to take a trade above over here or even above here, expecting us to go further up, maybe into the 17 or into 1880s, and I've got a better entry than if I was trying to chase this trade currently and trying to take buys over here and it keeps going up and down and doing all this crap instead of waiting for a clear movement on the daily to say, okay, perfect, this is going to go up. Additionally, because we finished bullish on the daily, you might find that this candle here sort of sits and consolidates for a bit, right? We're at a level it sits and consolidates. So this candle may not be a tradable candle. We may have to wait till Thursday where we get that drive further up as well. So there's lots of information that you can dissect from the charts, and it's how you interpret it, but using logical sequences to say, okay, what do I expect is going to happen? And then using historical references to sort of guide yourself to say, okay, you know what? Gold always has a rejection wick to the downside. So where does that rejection wick usually come from? Usually it comes from the Asian session, because the Asian session is the beginning of the day. So I have to be cautious where, it could show me that we are dropping, but there's not enough information to support when we're moving up, right? So that's where you really want to, be cautious and say to yourself, okay, I'll wait a little bit. If we do get a rejection, hey, as an example, if this goes bearish and I'm wrong, which hasn't been the first time, we can say, okay, I can take a trade all the way in this area effectively if we're going to go down at that point.
Right. And like you said, looking at looking before, looking at different scenarios, like for example, this can happen. We can get the same thing. Oh, okay, there's a baby music. All right, so yeah, same scenario that happened before, can happen again. So always keep in mind that it's gold and it can redo the same thing. History tends to repeat itself, and basically this is something that I'm looking at right now. This happened last week, right? The 10th of May. It looks like a lot of consolidation, but actually it's not. There were very nice clean moves if you think about it. And as Ted said, we had this massive bearish candle on a daily. Yes, grabbing liquidity and another, basically rejection to the downside, and then the massive continuation up on three straight bullish candles. So what do we see here? Also on this scenario here, the same thing basically, but a little, not as long. It didn't take us as long that basically in time wise as this scenario here. We had a break above here, creating a higher high. Market dictates that if we're going on a bullish trend, we're going to see higher highs and higher lows, right? So what do we see here? A high being created. Let me go ahead and mark it. So one high, right? And down here below, we got the low, right? Support is still holding. And at the moment that this breaks, right, that's that resistance, what are we going to call it, supply area, we are expecting, of course, we're going to expect a next higher high, right? So we're going to see a higher high being formed. And what do we, basically the fourth touch or whatever you want to call it, it's going to be a higher low. So at that point, we're going to definitely see a movement to the downside. And this always happens, well, let's say 90% of the time, right? The moment we create a higher high, if we're looking at just mere technical analysis on a bullish trend, we're gonna see higher highs and higher lows. For example, we have support created, we have a move to the upside. This is a high created. At that point, we don't know if this is gonna be a lower high or a higher high. The moment this high gets, respected, and then we have a small break to the downside, we're still, unsure, right? But this is a low. At that moment that this is being rejected and respected, this support and this resistance created breaks, right? What do we see next? A higher high.
So the moment that this becomes a higher high, these two automatically will be a higher high and a higher low. So what are we missing next? Just a higher low at this point. Basically a small, maybe not a whole retest down to the previous support, resistance now turned into support area, but direction is going to be to the downside. And this has that explained if you look to the daily, a lot of the time it's going to be on the Asian session, which is at 8 p.m. Eastern time, and that's when you want to catch that move to the downside if you're looking for the sales, which in fact they're going to be a lot more riskier than buys. But I believe the key level will be to wait for that higher low to be formed, and get some sort of rejection to the downside, support being created, and ride the move from here to a continuation up, right? If you missed, let's say you missed this entry here, or you missed the break here, or you missed the initial, basically the initial move. Let's say if trend was already changing at that point. Yeah, you had that initial move, the second move, probably got stopped out at that point. But if you wrote it from here, perfect. You could have closed here, partials, and then whatever. If you want to be more sure about that and seeing how this has been created, the higher high, and you're expecting the higher low to be formed, this can be also another perfect, not perfect trade, but another opportunity for you to take, support being created, and that's when you ride the move to the upside with a lot more confirmations than the initial move or the second move or the third move. And yeah, that's what I want to see always. On the higher time frames, especially on gold, I want to see that. I want to see at least two higher highs being created. It's kind of like chess, right? You want to see at least 2, 3 moves ahead before you do your move.
Yeah,
And
and also too, Mac, to your
yeah,
point, like if you go into say a 15-minute chart, if you go into the 15-minute chart and zoom in a bit, because I'll go through a little bit
yeah,
more
let's go.
detail, see if you can get these candles right when you're. Yeah, why is your screen so small?
I don't know. It's actually pretty nice.
Okay, so another thing that I look at is when people are, if something to give a little bit of tips to people is, what do the candles look like when they're moving? As an example, right? So you have, when we see candles side by side, so to speak, or in an instance where they're moving, I like to examine that because there's a lot of times that it'll give you a little bit of information and a little bit of a tip, right? So
Mhm.
as an example here, we see basically candles. Are in sort of sync. And what
Sync.
I mean by that is they're clean pushes. It's not choppy like say this area over here where it gets a little choppy. It's like a clean move up, you get pretty much a clean move down, vice versa. So now if I'm looking at that, I can almost think that these areas here are highways, right? So that I
Uh-huh.
know that in this area here, so let me just map this out a little bit more. I'll do this. I know that in this area here, it's like a highway, like similar
Right.
to a range, right? So we talk about that. So I know that if we are going to go bullish, and we've seen two candles that have had very strong bullish candles in a row like that, chances are there's something going on in this space here, and you can then take a note of that, and you can say, okay, well, if this candle is rejecting the downside, as soon as we start to come up over here, there could be a clear move straight up. And then people say, well, because the question always comes out like, I've missed the move. Like, how would
Right.
you have caught that move? It's like, look to the left and look to see how prices moved just within the last, say, couple of hours. And that'll give you a little bit of insight into saying, if price does start to move up, I have to be aware of that. And then what I may be doing is I might say to myself, okay, perfect. This, as an example, we know this is resistance. We figured that out quite easily. We can say over here is a little bit of a support potentially over here, because it comes out from over here. So, you've basically done this, right? So we can say to ourselves, okay, this is sort of the range, and then this is our bottom support area. Like this is our worst case. I think anything below this area, then we're changing trend, right? We're going further down. So if you have that idea in your head, you can say, okay, perfect. At certain levels or certain areas, I have to be aware that price can reject or reverse at any given time. So I have to be cognizant of that. But more importantly, now I can start planning out, say, my buy stop over here as an example, or look to take orders over here to start to drive up, because this candle as an example, or maybe the next one, will have a rejection, and then we start to drive further, push through.
Right.
And then once again, where are we going? Our initial target is going to be over here. I don't like to go into the wicks, but I like to go into the bodies of the candle. So I would say we're probably going to stop out at this area over here. This is bonus for us, depending on how the price is moving. Like if you look at this and then suddenly we start moving up, you can then move into your hour candle and you can say, okay, perfect. We've got the rejection we wanted in the last 30 minutes. Now this 30 minutes is going to start to drive up, or potentially the next 30 minutes at 10 p.m. is going to start to drive up at that point.
Right, 10 p.m. is another an hour that we want to go ahead and take in consideration right after the 9:30, which is the Chinese stock exchange open. Hence why I moved the hours from I don't know if you noticed that, from 8:30 to 11. That's would be the new schedule.
Yeah, I mean, it almost makes sense to start maybe at 7:45. You know, because this has always been the thing that I've talked about with people that do the Asian session. There's people before you that did it. I always said that you need to know where we have volume coming in. Otherwise, starting an Asian session at like 6:30 Eastern is just really a waste of time. You saw where the movement's coming from, but it's good to get on the charts, like you said, a little bit in advance, so you can start to map things out and see where things are going to move to. But I mean, for the most part, most of the moves happen between, I would say, 9 p.m. Eastern and 11 p.m. Eastern. It tapers down again. And then what you'll do is you'll wait again till London session at that point.
Right. So always pre-plan for the plan for pre-London and also London. That's another thing about doing the Asian stream after 8 p.m., which we already had the opening bell or whatever you want to call it for the Asian session, and then we have 9:30, which is another volatile time. And then again 10 p.m. to see how the basically how the candles are forming and heading into the London session, which is at 3 a.m. Eastern time. And pre-London, if you want to consider it, which will be at 1 a.m. We can also see that if we hold the trade past that time, which is 10 p.m. onto the London session, if you're planning on trading it, perfect. Take in as much knowledge as you want, as much confluence as you want from the Asian session, and just make the most out of it. Like we said right now, we had two options. We had the option to grab that liquidity to the upside for basically that rejection, which you did. You grabbed those 10 pips, and then we had the second option, which is sales, right? And it is clearly working. If we had that break below 1868, which we got it on the 15th, this would have been your entry point, right at the close of that 15. Yep. And right now you would have been on that trade, hoping that we can continue down. Not hoping, but getting that confluence that if we rejected that 1871, which is a major key level on the hourly, we can go ahead and see that we're heading down to maybe retest this here or this here, right?
Yeah, and also, Mac, to your point, the rejection over here was key, because then you say to yourself, okay, I can start taking entries on the 5-minute or the 15-minute, because if you go back to, like you said, to the 15-minute candle, the first 15-minute candle dropped, and then now that all these orders are taken from this area over here. Your next candles will probably follow suit at that point.
Right.
And that goes again, once again, with the idea that the daily candle, if we are to drive up the Asian session, there's potentially going to be a rejection to the downside first, and we're going to have sells. So, a lot of times people get upset with, like, well, you could have taken sells here, or you could have taken buys there. I don't disagree with that. And I think that's the biggest challenge a lot of people have, is they want to say that their analysis is the best. And that's the wrong approach to have with trading. Is no one's analysis is the best. It's the idea is what analysis fits best for your trading style. Exactly. Some people want to take the hour rejection and say, hey, we rejected off of 1871, Ted, I'm taking sells. And I look at that and I say, okay, that can work for your trading style, but it doesn't work for mine, because I'm thinking long term, and I'm saying to myself, I would rather potentially take an entry where we're going up in trend and then ride that trend further to the next high, instead of saying, okay, this is potentially the top, and now I'm guessing if we're going to now start to reject, and this is the end of the bullish run, so to speak, for a couple of days, and now we're going down. Because technically speaking, think about it this way: if tomorrow we finish bearish, we know that chances are Thursday is going to continue bearish, so you're going to have entries there as well. So these kind of future planning, this kind of idea analysis, this kind of critical thinking when you're a trader relaxes you. It allows you to, accept so many different outcomes and not worry about the fact that you missed a trade, because you're like, hey, I'm already planning for the next one. We didn't get to 1871. Was our analysis wrong?
No.
Okay, fine. You know what? If people want to say it's wrong, it's wrong. I'm not going to argue with people about that. We had an initial idea based on what we were looking at before it happened. We didn't execute on, hoping that we were going to hold to 1873. We executed. I got out based on my analysis. Other people got out too.
Right.
Nobody lost any money. And then it's like, okay, it rejected. So now, like you said, Mac, below 1868, 1867, yeah, here were sell opportunities, and it was already mapped out. So people have to get used to that, sort of fluid motion of trading, and not, getting upset with themselves if they've missed an opportunity, and then now suddenly they're trying to, chase a trade or something like that. You can now plan for London session. You can now plan for New York session, things of that nature. You can plan for the next day. That's really what I've always done, over the last 7 years of trading, has always been, hey, I'm going to plan for Thursday now. If Wednesday is crap, I don't have to worry about trying to find a trade. What I can do is I can focus all my energy on the next session, on the next day, and really scope out something now, because I don't like what I see currently. And that just builds your confidence, because now suddenly it's like, I don't have to worry about taking a trade today. I can wait then till, Thursday or Friday, and I can still make profit for the week. But more importantly, I haven't lost anything. And I think that's where the big thing happens with a lot of people, is the key is like, I haven't chased and I haven't tried to lose something.
Exactly, and just simple things is that you don't have to marry a bias. When you start marrying something, you want to go into like say sales. From this moment on, it's gonna be sales from now on, and sales, sales, sales. No, 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 no. It doesn't work like that. It just simply doesn't work like that. You can go ahead and get that short term sale, even though you're counter trending, trading, which it's I don't do that. I hardly go based on rejections, and I tell a lot of people just wait. Wait for the candle to close. If you want to go ahead and get the sales, perfect. Go ahead and get it. Riskier than buys, yes, a lot riskier than buys. Are they gonna work? Maybe. Are they gonna work 100%? Maybe. Yes. If that's your style of trading, I'm not gonna go ahead and emancipate on it and say, oh shit, it doesn't work like that. You gotta go ahead and always buy if we're going on an uptrend. No, if it works for you, perfect. Just be mindful of the risk you're running, and for me, it's the same way as you. If I want to go ahead and get a trade on gold, specifically just talking about gold, I'm gonna go ahead and buy if we're going on a bullish trend based on the higher time frame. So if I see momentum going up instead of going down, in simple terms, I'm definitely gonna stick to buys rather than sales. Sales can work, but if you notice on the Asian session, when it comes to the counter trend trading, it moves really slow. Like this 15-minute candle has been moving for the past it's about to close, and it just moves really slow. And this is not the type of trading that I like. I don't like being stuck in a very slow, sluggish move. For example, we broke up below 1868, whatever, we closed underneath, but this has only moved. If you want to go ahead and scale this out, it's only moved 10 pips, and now we're going back again, back and forth. So that's another thing that I've noticed during the Asian session. Like if we get that breather, like how you like to call it, the breather, it's gonna move really slow. We're not gonna have a move like this, or a move like this per se here, or for example the move that we had here up to 1870, almost 1872 per se. So now we've basically just moving like a snail, right, at this point. perfect. The trade can continue down, can definitely hit these wicks here, fill them out, perfect. But for me, that's not my style of trading. I will close my trade automatically the moment I see that it's moving at 1 pip per hour.
Yeah. No,
And
that's exactly it. And I think a lot of the discussion that we have, and especially today, just the working session that we did, a lot of this stuff, it comes down to the fact that, you're going to find that a lot of this is experience. And a lot of times people want, they want to understand trading, and they want to understand, like what they want to, like in terms of movements and in terms of the market. And a lot of this is just going to be experience. It's going to be trial and error. And you're going to start to realize it's one of the reasons why, like you saw what I did is I grabbed a quick entry, I exited, because it's like, I know the Asian session is very slow, like Mack was saying. It's very sluggish. So it's like, you know what, if it's not really going anywhere, if the structure doesn't really look great, I mean, 1871 was a resistance, it didn't look like it was going to break. If I can grab, 5 pips, 7 pips, 8 pips, or 10 pips off a move on the Asian session, I'm pretty happy, because, at the end of the day, I think we can all agree that, people just like clicking the button.
right.
They like the idea of, hey, I was in front of the charts. I created an opportunity for myself. I executed, and there was a result. Right? I don't think any one of us goes onto the charts and sits there and says, "Well, I'm just not going to do anything. I'm just going to look at the charts when it's an active session or there's an opportunity." Right? Everyone has that trigger finger where like they want to execute. So the idea, once again, is if you're going to execute within your plan. But especially with the Asian session, don't go overboard. You don't have to, right? If you can grab a little bit over here, it's great. It's similar to like if you go to the casino, right, as an example, and you happen to be walking through it. So you're in Las Vegas or wherever you are, and it's like, I've done this before. It's like I'm on my way walking to dinner. I happen to walk by a table. It's blackjack table, fresh deck. I'm like, you know what? I'm going to play for 5 minutes, right? And it's like, oh, I won a couple $100. Okay, dinner's paid for now.
Yeah, I remember.
Yeah, it's like I know I can lose a couple $100, but I'm not going to be sitting here for 2 or 3 hours playing blackjack when I know I have to go for dinner, because I know I can play another time, or I can play when I'm fresh, or when there's nothing else to do other than to gamble, right? So it's the same thing here with Asian session. It's like, hey, if you see something, grab it. Don't think that you're going to have like the ultimate trade. There are days that the Asian session moves very hard, no doubt in my mind, and I've seen it happen before. But here, it's like, take what you can get. Just go to sleep, go relax. Wake up tomorrow and just play again.
Right. This was basically the trade that we had today, right before you got in on GJ, right? I was actually in before this break. But just to break it down easily, I clearly just stated that if we get a break, if we start seeing this candle here, this 15-minute candle breaking above this area, or breaking the high of the previous one, knowing that we had rejection here and this is creating a higher high at that point, that was basically it. Get in the trade and call it out as soon as you get 10 pips. I even set up an alert, 10 pips right on the dot. Yeah. And that was it. 10 pips. I closed. I saw that 15-minute, which it was a 30 as well, closing with no top wick. I said, "Fuck it, I'm out." Quick,
And that's the key, because like what people don't understand is this, once again, like we mentioned earlier, this builds your confidence, and that's what a lot of people lack when they're over trading. The pressure to trade well, or a lot of people message me and say, how do I get better? How do I do this? It's like you get better by doing things in increments. It's like I was at the gym today, and I was squatting, and I was at like, I think I was like a 180 or 190 pounds.
Nice.
And I literally just felt a tingle in my quad.
Oh, that's like, it was like, say, nope, that's it, I'm done.
Yeah, like that's what it was, like literally, because it's like, right away, it's like I don't want to pull my quad or do anything crazy, and it was just like, as soon as I felt it, like it was almost like it was tight. I'm like, nope.
Man. Oh,
no more.
That cramp. That were you dehydrated because you're on a keto diet, so the carbs kind of help with when you have a lot of glucose, sugar, especially. It helps with your muscle, to get water in them. because the sugar, the glucose helps with the cells, and get more water in them, and kind of you retain more water, hence why you're not dehydrated and your muscles are not as tense as if you're on a high carb diet. So that's another thing about doing keto, and it's just kind of like trading if you think about it, because
Yeah, it is. I mean, because everything's regimented,
right,
and
it's a
it was
regimen.
like for me, I look at that, and it's similar to trading. It's like, yeah, could I have done another set? Could I have done
Right,
another rep? Probably, but
probably.
it's the initial that doesn't feel right. That hasn't felt right. That hasn't happened before. I don't want to. I don't want to have an injury because now I'm looking long term. Where it's like,
Right.
man, you don't want to mess up your quad
And
because then you're going to have to, fix it for a bit or whatever. And sure enough, like I came back home after the gym and I relaxed for a bit, and now like I just tapped it and it's fine. Like there's no problems. But it's like now in the back of my mind,
what would
I'm
have
just going to
happened,
be a little
right?
bit more cautious and stretch a little bit more before I start, and maybe drop down weight the next time I do leg day, probably in 4 days from now. When I do leg day again, I'll drop a bit of weight and I'll focus more on safer movements, like like a press or an
Right.
extension, or even do a little bit of lunges with lighter weight just to build that back up, because I think I've reached my capacity with my quad for the time being, so I don't need to push it, right? And it's like it's the same thing with trading. You don't need to push it. You just have to stay consistent, right? Because
Right.
it's similar. You lose money in your account, you blow your account,
That's
you're
it.
starting all over again. Where here it's like, hey, if I can grab a little bit each day, I'm going to see progress. I'm going to have more confidence in my ability, and then when those big moves come, I'll catch those as well, and then I'm off to the races at that point.
Right, and there's nothing wrong with that. Lowering your lot size weights. That's something that gets psychological at some point. Like, oh shit, at this point I have to lower my weights. I'm gonna look like a fucking pussy. No, it's not. People get that concept so wrong, and I still see it nowadays. Especially. Oh shit. Oh, give me 1 second. I think I'm lagging here. You can hear me?
Yeah.
Yeah, because I don't know my Ethernet. I guess my cat bit it. So the cable's like glitching. Fucking cat. But yeah, the same thing. It's like ego, right? Like ego lifting, whatever they want to call it. The gym bros, they go, oh yeah, I want to hit my PR today. But not all the. It's not like every fucking day of the week you're gonna feel the same. You're not gonna have the
Yeah.
same motivation, the same energy, the same whatever. If you're a male, the same testosterone levels. If you're a female, the same estrogen levels. It's not the same. It fluctuates, and it's the same thing with trading. Some days you're gonna feel comfortable enough to drop a lot size that you've never dropped before, but you're gonna feel that comfort, right? And you're gonna be perfectly fine. I'm gonna tell you straight up, you're gonna be perfectly fine, and that trade will probably be a success. But then you go ahead and you get a little greedy, then you put more weight in it. What's gonna happen? You're gonna have an injury. What same shit that's happened to me. I'm hard headed like that, and I used to be even more hard headed before. So I have 14 dislocations on my left shoulder, 2 dislocations on my right one. And you've seen me. I've done stupid shit lately. I was trying to fucking military press 2 plates. Just for the fuck of it.
Yeah.
And then I think back, I'm like, yeah, I was dumb. But I had this guy in the back trying to spot me, kind of like my mentor at that point. Compared to trading, but this guy was holding me with 2 fingers. So I'm like, well, he's like a signal provider at that point.
Yeah.
But yeah, man. I think that was it for tonight. We're gonna wait until maybe 10 p.m. see how this is moving, because right now we had that nice rejection here. But what I can um, basically map out here is that we might range around here. This is a 15-minute range, and this is something that don't want to see, and I don't want to be stuck in right here. Small
Yeah,
little
and you can see
trench.
gold had that rejection on the 15-minute and it was bullish.
Right.
So now you can say, hey, we're going to probably pop up. But once again, we haven't broken back into that range. So you may find there might be one dip a little bit further down again, and then we break further up at
Right.
that point.
So basically,
And that carries on with our conversation of the fact that the daily candle is still trying to form, and it will continue to go bullish. So now, as a trader, you can start to map it out and say to yourself, okay, where do I expect the daily candle to flip bullish? And with that point, I can go into smaller time frames, get a better entry. I know now my stop loss is going to be the lowest portion of the current daily candle.
mm-hmm.
And if we're going to go up, we're going to go up. If not, that's what it comes down to. If that's sort of what you're looking for as a trade, that's how you would manage it at that point. That's what I would do is if I'm looking for that. But I mean, for myself personally, I'll wake up tomorrow. I'll trade 9 a.m. Eastern, 9:30 a.m. Eastern. I'll work on gold at that point. I'm not too concerned if gold starts to skyrocket now because it'll pull back probably be at London, and then it'll continue further back up later on. So I mean, like I said, there's going to be multiple opportunities. You don't have to try and be a hero, catch like 70, 80 pips. If you want to do that, all the power to you. I really no, but I think it's great if people can catch those big moves all the time. So be it. I just feel comfortable grabbing my 10 to 50 pips. Sometimes I grab 100 pips. It happens, right? But the key point that I make with that is I'm always in control of my trades. I'm always comfortable with what's going on. I'm never trying to overextend myself or putting myself in a situation where, it's like, oh, that's not good. Well, what do I do now? Like I never have that question for myself. And a lot of people have that question when they trade, and that's something you should get rid of is, so what do I do now? And it's like you should already have known that before you entered the trade. You should know every possible scenario that you're going to go through with this trade and where you should go and how you should execute and what you should be doing. Like there shouldn't be okay, well now what? Like that should have already been discussed before you actually executed on the trade.
Right, like being lost in the woods. Like what now? Like
That's
what
right.
do I do now? Right, like where's my compass? What do I do now? Yeah, and that still happens to me a lot. I get to that point that I'm in profits and I don't know what to do. Should I close? Should I hold? Should I close partials? And that's something that I still struggle with that sometimes. I'm not gonna lie to you. I still struggle with that. I have to set up that first take profit, and that's gonna be it. Call it out as soon as it hits. I'm not gonna hold. I'm not gonna try to make something new. I'm not Da Vinci. I'm not. I'm not. I'm not. I'm not a. I'm not a genius. I'm not gonna make something new. I'm gonna stick to my plan, and that's it. Plan and my plan only. Yeah, that's what a lot of people struggle with. They get to the point, whatever they get into profits, or even into drawdown, and they don't even know what to do. It's like, oh, should I close now? Should I not close? Should I hold?
Yep.
Should I not hold? And yeah, that's the indecisive part of being I guess, a human being too. So that's a good thing to get rid of. I say that's the best thing to get rid of. That questioning, right? The little voice in your head in the back saying that, oh shit, should you hold more? Should you close now? But at the moment you kind of like bring them down to like a lesser level, like, oh, I know what I'm doing. I know what I'm doing. I know what I'm doing. I know what I'm doing.
Yeah.
Fuck the voice in the back. I'm gonna go ahead and close, right? That's when you start noticing that change. When you get out of the break-even phase, whatever people want to call it, and you start basically making profits, right? Being a trader and being consistent. But yeah, overall, this is basically the best way to plan out for a London session, which has more volume. Lately, I've been seeing that the London session it's not bringing as much volume as before, especially on the month of April. But now that we're in the second quarter, I think we're gonna have a better, more better volatility per se on the London session as well as the New York session for GJ and gold. I know you don't trade GJ, but basically that's the pair that I trade the most. And for London, it's very complicated to trade it. Now it's a lot of fucking. Look at this shit. This is just nasty. This is from today, right? Today in the morning. So disgusting, right? And then New York, the same thing. It's just a continuation of London. Prior to that, Monday was a nice move, which was here. And that's it. I don't see that much going on GJ, and that doesn't mean I'm gonna just jump to gold. But I know how to trade gold, and basically I want to just stick to gold for now on the Asian session and see these two moves from 8 p.m. to 9:30 p.m. And if it's gonna keep on moving, I'm not gonna keep on looking for trades if I already took one trade within those hours. Like I already did take the trade on GJ, and you called that trade on gold. Basically, I have nothing else to offer here. I'm just gonna be here for the comments basically, and just to listen to you or somebody else and check charts. That's and I'm very proud of that. Calling this a day, saying that shit, I just made enough to um to call it a session, right? Call it a day and wait until tomorrow, right? There's no reason for me to go ahead and say I'm gonna jump into another trade because I want to make a little extra. No, I'm done for the day, and that's it. I even closed the terminal on the live. uh, so if you guys hear the terminal in the back, just go ahead and scold me, say something. But yeah, I'm done for the day. I think this is gonna be a very good session. I'm gonna post it on YouTube as well if you guys want to review it. Um, Everything that Ted said was golden, right on the dot, on the spot, and that's very good to know if you're planning out for London or even pre-London, right? So now we know that if we keep grabbing liquidity, or maybe we're gonna continue down as the daily has just started. Huh? Oh shit! It looks like a guy from the CIA. Yeah, so basically, like he said, we might continue down. We're getting some rejection here. Support being formed here for that daily to maybe get a wick fill down below here, and then a continuation up, right? Or we might just range for now. But as of right now, guys, I'm gonna go ahead and call the stream off because we're done for the day. I don't think there's anything else for us to do, or unless I have one chart here that somebody sent, so I can go ahead and check it. Give me 1 second. This dude here. Give me 1 second. What was your name again? And thank you, Ted. Thank you so much. That was great. Appreciate that. Okay, let me see. Pit bitch. Man, you guys got some weird names in here. It was Salim. Yeah, it was Salim. Salim. Give me 1 second. I'm gonna still hold the stream, but just to check charts. Salim, can you send that again, please? Because I can't find it. Oh, I got it. Got it. All right, let's see what you got. You got. Man from the CIA. Oh man, what the fuck happened to my mouse? Oh, all right. So let me go ahead and copy this. So right now, trading gold is very risky. You see how this is moving. I don't suggest anyone to stay on it. Oh, wrong chart, brother. Salim, you sent the wrong chart.
That wasn't me. It must have been someone else.
No, it's somebody else
one.
from the YouTube, Salim. Not Salim.
Yeah, no worries.
Salim with 2 E's. Yeah, he sent the wrong chart. If you can send it again, yeah, go ahead and check it out. Anyone in the Zoom has sent anything? No. Oh, okay, first TP on GJ got hit. Perfect. Oh, that was from way before, so I guess we're having some sort of pullback now. Okay, cool. Anyway, I think that was a very good trade. First thing during the session that DJ trade, so that was good. Yeah, just be happy with the slice of pie you get, right? So, and I guess this person left. So, yeah, no, I'm not gonna check anything. So I'll be right back, guys. Let me go to the bathroom, restroom, whatever you want to call it. And in the meantime, so I'm gonna show you guys some little commercial here from our friends. So we got Mack here. That's me, and this is a little commercial for Dominion Markets, one of the brokers that I use, along with the Traders Domain. So I'll be right back, guys. Okay, welcome back from the break, back from the dead. So guys, I'm gonna go ahead and check this chart from chart. It's two of them. Oh no, it's just one. Professor Pipich from AU. I don't know if Burner is here. Burner can definitely help you out with AU, but I'm gonna go ahead and give it a try here. See what's popping with AUD USD on the 15th, as well as the 4-hour. See what's going on here. This is from last week still. You know, we have this 0.7800, which is a very strong resistance zone. Rejected 1, 2, 3, 4 times now with the on the 4-hour. So if you go based off, you know, patterns, right? There's a pattern called head and shoulders, and there's a neckline. It's all bullshit because basically they're just areas of breakouts and retests, right? So you have a breakout to the upside and then a retest to the downside, creating one shoulder. When it dislocates, pops up back to the neckline, right? Which is the resistance, goes up, creates a new high, and retests again the previous support or shoulder, whatever, which is the right one. Then but dislocates, stays there, and fails to break, and then comes down again. So now what are we gonna wait and see on AUD/USD? Basically the same thing. Now a continuation down to retest again this support area. So a little hint there. And remember, AUD/USD moves a lot during the Asian session. So if you want to catch us at an entry, I suggest you to do so within the range, right? And of course, expect the breakout. But AUD/USD, if you kind of like correlate the pair with gold, you know, commodity with a currency, and it's not really good to relate. But anyway, let's see that it's paired with the dollar. So dollar being the safe haven here on AUD/USD, it's gonna be the one moving the charts most of the time per se. But yeah, let me just go ahead and check this. I know it's getting a little late and it's boring already. So last thing here from Professor Pipich. He wants 7800 to break. Yeah. Right. Oh, I didn't even read that. See, we get the same levels. Perfect. Alright, so the USD. Alright, cool. Beautiful Pivot. Beautiful Mr. Pivot. Alright, so I see one trend line, right? From this is the 1 hour on AUD/USD from the on the feed. Nice little channel here. Perfect. This will be your support here, even though it's diagonal. It's still support and your resistance, right? So shit, people in Zoom, sorry about that. So basically, this is a chart from someone in YouTube. This is Mr. Pipich, Professor Pipich, with a PhD. Pretty hard, sheesh, out of content. So basically, you have this trend line also here, which is the one that's, I guess, well, basically being a resistance to this area here. That's why we're not breaking above. If we, you know, it makes sense, right? This here, this is a resistance, right? That's another thing people don't get. Resistance doesn't mean that it's always going to be completely flat, right? It could be like this, it could be like this. That's the resistance, right? Okay. Anyway, back to the topic. So this is the channel and you're looking for sales. Now you want sales up to 0.77. I suck at counting AUD/USD. 77,300. Okay, cool. 77,300, and your entry will be, oh, you're already in it. Okay, cool. You're already in it, and you want this to break below this area. Yes. Bye. It makes sense, brother. Like, to be honest, if you get something like this, that would be clutch. You know, oops, sorry. This right here. You know, these are the type of moves that I like. Bang. Something like this. Bang. Like this. Imagine you get that shit. Bang, bang. 3 1-hour candles just bang. Right to your fucking take profit. It's coming from here, I'm guessing. You know, just don't be greedy. If you see the trade working out in your favor and you broke this support or trend line, whatever you want to call it, that's when you gotta be a little, shit, I'm gonna close or am I gonna hold? For AUD/USD, you know, it moves very slow, so I think you can definitely swing it. Be in here for longer than 3 hours or whatever the case is. But yeah, man, AUD/USD ranges a lot, and it's really not my pair. I don't have that patience, to be honest. As for gold, yeah, gold. Yeah, it looks like we're definitely gonna break above that zone. I have an alert set up just in case, right above here. So in case we break 1871 and close, right? Not reject, close. We're so close to close, but it didn't happen, right? Rejected. And you know, if you want to trade rejections, that would have been perfect. That was a nice rejection spot right there. Bang. And then a continuation down, a couple of sheesh, beautiful. Yeah, let me take this off. Okay. So overall, as the trend is still bullish, I'm not gonna take any trades. Seeing how this moved down here, it actually filled out the wick we were talking about. So let's go ahead and look into the daily, right? Daily actually moved a lot from when we started talking about it, and wow, sheesh, it almost filled out the wick down here. So yeah, as Ted was saying, if we keep pushing down and create more support down here, you know, basically a liquidity grab for price to continue up, that would be perfect. That's like buying gold on a discount, right, from the dollar store type shit. And it's nothing wrong with that, you know. But then again, you don't want to be too risky and buy right at the bottom. That shit tastes nasty. You know, calling a bottom from here, it's risky. High risk, high reward trade can work out. Going to the smaller time frames, just don't get stuck in a range, you know. But anyway, guys, I'm gonna go ahead and call it out for tonight. Come to Florida one day. I'm from Miami. Laurie Mendez, you everywhere. Yes. Oh no, you're talking to somebody else? Laurie. Where's my Mexican girl, Selena? Jasmine. But yeah, this was beautiful, right? Yeah, I don't like a 30-minute close. Chico Suave. Eh. Yeah, if you see this right now, right? You know, looks like we're coming down and then bang, we had this nasty 15-minute candle just dropping, you know, 33 pips. Beautiful. So yeah, Elon Musk's Dogecoins. Actually, talking about Dogecoin, let's see what this shit's doing. Oh wow, look at that nasty rejection. Imagine buying from here now. If I had that trade up, I would have gotten stopped. Man, slap right on the face. Well, look at this, bro. The kilos are right on the dot. A little off, not too off, but you know, you get the point. So what's the deal here now? With the shit coin, the Dodge coin, Dodge, Doge coin. Oh shit. Okay. Rate is your dick. 1869. Yeah. Come to France to buy cheese. I don't want cheese, man. I want some. I want some. I want some party things. Anyway, guys, yeah, I'm getting distracted here looking at bullshit at this point. So, what do you guys think about Dutch coin? The douche coin. The douche coin? We close 50% on what? Pippage? On AUDUSD? Nice. Beautiful. So, yeah, sell, break, perfect. You know, this played out so nice, right? This right here. Actually, you know, I've never posted anything about AUDUSD, but the way it's moving right now, you know, it's created a higher high, and now on a higher low type of situation here that it needs to be created for price to continue up on AUDUSD. So yeah, overall, if you're still stuck in this 4-hour range, then it is what it is, right? You want to get out of it and ride the wave. You see AUDUSD how it moved the first couple of weeks of the year, you'll be like fuck, but it was one straight bullish run. This right here. That's really all right. So I'm gonna go ahead and say good night, guys. Be safe. Thank you for showing up. I'll see you guys tomorrow maybe. I'm thinking about doing a stream on Wednesday to see how it goes. If you guys want to show up, you're more than welcome. If not, then Thursday it is. But the time change, it will still be the same. Dutch to max WAP. Should make a coin called WAP. Whereas what. So anyway, guys, bye. Be safe. Click the like button. Thank you so much for showing up. Only 23 fuckers in this chat only, so really not worth it. Wait until 11. Just fuck it, you know. I'll see you guys tomorrow or Thursday. Be safe, guys. Take care. Good night, and love you all. Bye. Positive vibes.